I am not invested in Tesla, and I explained why when I produced a video a few months ago in reply to Master Leong, who said to Tesla's avid investors to have fun being poor. I will leave a link in the description below to that video. I have been following the news on Tesla, but I still fail to understand the hype around Tesla. Especially when it has been forced into a corner with price cut after price cuts. Aggressive competition and less willing buyers have forced the hand of Elon Musk to lower prices in the hope of retaining Tesla's market share. Elon Musk said that we have taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, there is one big risk with such a strategy. It is like how I do not buy anything on Shopee or Lazada these days until there is a super sale which I know will happen monthly. Yes. After a while, consumers wise up to price cuts and will hold back on purchases. It is just like what happened to the Japanese property market. After 2 lost decades, young people simply refuse to buy their home and prefer renting. They see how the older generation bought property only to see property values declining year after year. So, we could see potential buyers not only pivoting to better value for money propositions, but they could also wait to see how much more Tesla is going to cut their prices. Apparently, since the beginning of the year, after so many price cuts, the price of a Model Y has declined some 30% in the USA. In their latest quarterly report, the effect of aggressive price cuts is clear. Revenue is up but earnings is down. Total revenue was up 24%. Net income was down 24% from last year. This is never a good sign. Tesla's common stock is priced at about 50 times price-to-earnings ratio. This means that the market is pricing Tesla like a growth stock. The high price-to-earnings ratio suggests that investors are expecting higher earnings growth in the future from Tesla. However, with earnings declining instead, and this is likely to continue as Elon Musk seems ready to cut prices again, we could see the price of Tesla's common stock in a tailspin. With earnings reducing, Tesla is not a growth stock but is valued at the moment like one. Its stock price has plenty of room to fall before it can be considered a value stock. The only way I can explain why Tesla's stock price isn't much lower than it is today is because of its cult following. Elon Musk has a lot of charisma, and his grand visions of what he can achieve probably have a huge following. For sure, he has proven skeptics wrong with what he has achieved with Tesla. However, right now, Elon Musk seems like a one-trick pony to me. Look at what he has done with Twitter and how he had to sell billions of dollars of Tesla stock to fund that project. Tesla's earnings is not growing. Tesla is too expensive to be a value stock. Tesla does not pay a dividend, and die-hard investors are not being paid while they wait for whatever improvement they think might be coming. I know what it is like to be a fan. I get emotional and would pay whatever price I must pay to get my hands on some merchandise. Well, if I am very rich, maybe such behavior is okay. If I am not very rich, well, good luck to me. The only reason why Tesla's stock price isn't much lower than it is today is likely because of its cult following. Tesla's numbers today show that it is no longer a growth stock. It is too expensive to be a value stock. It does not pay a dividend, and investors are not being paid to wait for things to improve. So, why should we invest in Tesla?